that need to add up. But there's also behavioral sides of this that are not working and that I'm not working. I'm not using it, right? So my setups as of right now pretty much suck. And the reason they suck is they are, for the most part, undefined. Okay, we have certain undefined setups, and what I have right now is a jumble of a whole bunch of different setups that I have worked into a very dysfunctional monster that basically only eats me and eats my money. So my monster is eating my money. That is basically what is happening. And what I have to do now is stop and kill the monster and build a new monster, or not a monster at all. Kill the monster and build an actual setup. So I don't know. Santa Claus, bring me a setup for Christmas. Now I'm struggling with this. I'm really struggling with this because I'm really afraid to commit to anything. It is really weird. There is a strange paralysis that is happening inside of me right now as I go through thinking about what is my setup. I've had some. I've tried many. I've tried EMA crossover setups. I've tried MACD crossover setups. I've tried and none of them give me the results that I want, right? And none of them give me and because I don't get the results that I want, I dump them or I try and morph them into something that will give me what I want. And it may be that may be the issue. Like, I haven't actually thought about it till now. It may be the issue is that I'm trying to tell the market what I want, and maybe what I need to do is be like, and not do that. You can't do that, right? I don't control any of this, right? I'm only along for the ride in all of this. So it could be the fact that I'm trying to impose my will upon the market. I have not actually thought about that till just this very moment, till I got it out there, which is the reason I do this show, is so that I can sort of think through things. Now, there is some stuff in the show that I'm going to go through, because one of the things I'm beginning to realize is it's very easy to just run in, grab one setup, and use it. And I did that the first year. I used what was called the Heikinashi scalping method, and they used it in combination with the RSI. This is a setup I learned. I don't remember the guys I learned it from. But that first year they did save me. I used a combination of the RSI and the Heikinashi EMA scalping method. So it used the RSI, the EMA3 to scalp, and I doubled my account. I went from I did more than that. I went from $500 all the way up to almost $12,000 for the year, and that was very successful. What I will tell you about it is everything in the market works until it doesn't. And in March of 2021, that method stopped working in the market. I tried it for another 4 months, and I continued to lose. So I began looking for new things, trying to understand new things, new ways of making money. Okay. Now, I also tried this in conjunction. There is a guy, Scott from SMB Capital. Those guys are amazing. Now, Scott talks about what's called your playbook and having your playbook. And that seemed very important to me. One of the things that was very interesting about the Heikinashi scalping method was it was very important to watch the moves happen in the first hour of trading before you actually traded. And part of the reason that is because you needed to see that the market was behaving in accordance with the Heikin-Ashi scalping method. So where you set there's a standard there for where you set entries, and if you look and you can see, I did very, very well trading like the GameStop short squeeze because they were using Heikin-Ashi, the Heikin-Ashi scalping method using the EMA. So it was a very simple setup. It worked very, very well, and until it didn't. And so I began looking for other plays. I've been trying other plays, and really kind of trying to figure out my own thing. I have a concept, some other concepts that I want to use, that I want to try and do, but I'm not to where I can do those yet. And that's a goal of mine, is to reach where I can actually do. I have a setup that I'm calling the infinity trade that I think will do very, very well. It just requires way more capital than I have. And right now, what capital I do have, I can't risk on an unproven strategy. Okay. So anyway, going into this, there are a few things that I think that with setups, different people have different setups. They have momentum setups. They have swing trade setups. They have breakout setups. They have reversal setups. There's a ton of different setups out there. And it's really hard to figure out the one that really speaks to you. There are guys who trade trend. There are guys who trade counter trend. There's so many different things out there that I have seen. But what it has done is it has kind of it's made me the donkey that is literally between what's the donkey that goes between they put him between two hay piles. He's equal distance, and he gets he's so indecisive that he won't go eat, even though he's hungry. He won't go to either pile because it's too hard of a decision, right? Now I've basically multiplied this pile by like 50, and I'm literally not eating. I'm starving to death over here, more or less. So I'm a jackass. That's basically what I was trying to say with that. Okay. Where then do I begin to fix this? Well, there's a few things that I think I want to put on. I think the very first thing is identifying what not to do and what not to trade. This is my first goal as far as is really setting this down. Now, there are some things that are very, very simple, okay? And we will go to the chart behind me. Rule number one here of what not to do, okay? We'll go to the daily time frame, okay? What I have put on here are the Bollinger Bands. Okay, here's where you are with this. You do not go long above a Bollinger Band, and you do not go short below a Bollinger Band, okay? You can see here where, and I have done this, I have gotten caught in this almost every time except this last time. This last time, I finally figured it out. I have been short at every single one of these, okay? Now, there are things about this that seem confusing, right? Because you get this move all the way down to the Bollinger Band, and then you hug along this Bollinger Band and you stay down here, okay? This is a challenging thing. This becomes very, very challenging because you miss, that's a $20 move right there that you miss. So, but at one point down here, you get this rocket ride back in the other direction. So there's a few things about it. Not going short underneath that Bollinger Band is very important, okay? Second of all, especially on your daily time frame, I'm on the daily, right? On our daily time frame, we're not going long over the top of the Bollinger Band. That's tough. Now, the other thing about it, again, this is where it gets tough, is because you get the move up to the upper Bollinger Band, and then it just hugs along there. Okay, now, okay, so this is very interesting. This is very interesting. This chart looks a lot smaller than it is. This doesn't really give the way I have this set up a good set of what the price range is and what it looks like to me. But the rules are: don't go long over the top of a Bollinger Band. Don't go short. Eventually, it's gonna hurt you. Okay, eventually it's going to snap you, and this is really tough too. This is really important. The reason you don't want to do this, if you go through here, you turn your Bollinger Bands on, and you're playing something like 0 date expiration. If your contracts are going to expire that day, you can get burned really, really easy. Okay, you can get burned really easy into this. Okay, so okay, now a few other things about this. So we don't go long over, we don't go short over, right? The other thing, and I'm going to zoom in a little closer so you can see, because it doesn't look accurate to me. There's some stuff in here. This sideways price action right here, sure, little bit of, you had this little bit of volatility here. You had 1 day of that. You would have missed, if I traded this and lost $1,000. I had lost so much by the time we got through all of this. I had lost so much. I couldn't even trade this. I missed this move. Okay. Now, my mentors, the guys who I do follow, most of them missed this move too. Most of them just didn't. They tried to get long. This day happened. They cut their long position. They missed it. But they got this move here. They got this move here. They got this move here. They got those 3 moves, 3 out of 4, and they traded this move right back up here off of the mean right into the upper Bollinger Band. Most of these guys that I follow who trade based on these rules caught those moves. They did not catch this move. Okay. Now, because I like a fool traded through all of this, I missed that. I missed the Powell day. Okay. That was when Powell gave that Bookings Institute speech and made the market just jump up. Pardon me. I need coffee because I'm not sleeping. No sleep till I figure this out, or Brooklyn, whatever. Anyway. Okay. So I've learned that there's 2 things: days not to trade. Okay, see these 3 days right here? I was doing fine until we got these 3 days here. I knew those days were coming. Those days, I should never have traded. I traded one of those 3 days, wiped me out again, put me right back at square one. When you get so far into technical analysis, you know this is happening. You know this is coming. And the reason you know it's coming is because you know what they're going to do is they're going to narrow these Bollinger Bands in. They know they're tightening the range. And so what's happening here is, okay, you have this distribution through here, okay? This coming up was very interesting. This was all distribution through here, okay? Then all of a sudden you got this bit of accumulation. You got this rally through here, and now you're getting the distribution again, okay? This is a battle of what they call supply and demand zones, okay? Now, I don't trade supply and demand zones, but I know to be aware of them, okay? I know to be aware of them, where they happen, when they happen, why they happen, okay? Anything above this 3,900 level on the S&P or 390 on SPY is a pretty between, I think it's between, if you go and look at volume profiles of these, there's a bit of demand for the S&P at the 3,900 level, which is roughly the 390 level for SPY, okay? Roughly, okay? There's a little bit of there. All right. So again, in the interest of keeping this simple, we don't go long above an upper Bollinger Band. We don't go short below a Bollinger Band. Okay, those are things not to do. Again, through distribution and through accumulation, no longs, no shorts. You want to be in a trend. Through this here, there is no trend. Okay, you have support, support, support. Now, if and this is again another thing that like I can see that traders do. This is a support and resistant trader's wet dream through here. They're going to they will throw this up every time it gets to third. Well, this one was 393 on SPY. Every time it gets into that area, 392, 393, it support traders come in, they buy, they run it up. It I know that's happening. I'm just not that guy. That's not my style. I don't trade support and resistance. I don't like support and resistance. And most of the time, because it will fake you out. The first 6 months of trading in my life, I traded support and resistance, and it failed. I tried for a month to trade a pivot point strategy using support and resistance. It also failed. It just doesn't speak to me. It's not logical in my brain. I can't willfully take those losses. So that wasn't something I do. And again, this goes into right now, I'm thinking about where my setup is, what my setup is. Well, right now, there's things I know that it's not. I know that it's not. I know that it's not support and resistance trading. I don't do well with that. I know scalping works very well. I like scalping. I'm very comfortable with scalping. I don't know how to do that with options so well, not to the point that it will matter. Okay. I don't like trading. So I don't like support and resistance. The other thing, EMA strategies tend to work, but they also tend to be trappy. Okay. They have a very good setup of fake outs. And unless you have a really solid understanding of like price action, if you have a definition of price action, it's hard to spot those traps. I don't do super well with price action yet. I am still learning. I'm watching. I have better, I really, and especially in this time where you have, if we go and look at the volumes, you only have one high volume day here. The rest of this is weak volume through here, until you got back in here where you had some higher volumes. And even then it drops off, right? So I know something that volume is going to matter to me. I know that I'm going to need volume either in the upward or downward direction. Volume will matter. The other thing that I will know is that price needs to be moving quickly. We have not had overly quick moving price. Okay. So this is the stuff I know things is not. Now, the other thing that I know. Okay. So that all being said, I do have, in spite of all the stuff I know not to do, where to stop, quit trading, don't trade it. It's not a tradable day, right? And especially because I only trade SPY, we need to think about what setup does work. Now, there is one that I have, but it only happens rarely. It does not happen frequently. Okay. This is a setup that may happen once or twice a month. Okay. It may happen once a quarter. Okay. So now, and it's a pretty solid setup. Now, the way it works, I will show you. And this is another one that I have gotten from Ira. Now, Ira Epstein. Now, Ira does not trade this setup. Okay. He does not. I am working to try and trade this setup. Okay. Now, where we got to go edit indicators first. I'm going to go to the MA. Okay. This is going to be very important. All right. Okay. So this setup is pretty interesting because, okay, so this is the 18MA. This is the slow stochastic. Okay. The 18MA is 18 simple moving average, 18 daily moving average, 18, right? Guys use this. They use the 20, the 18, and the 21. Okay. They don't use them all together. They only use one of those. And that is typically what they consider. Every trader I've ever talked to considers that average home base. Price will always try and return to this average. And you can look, even in this downtrend, tries to get back up there, tries to get back up there, tries to get back up there, tries to get back, right? Tries to come back down to it. Even on the upside, it continually tries to come back down to it. Okay. Now, all right, here we do, which just gave me the idea. I think I know what my setup is now. All right. Here's the deal. Go here. You're up here. Come down here to your slow stochastic. The minute you lose that, okay, the minute you lose, now, all right, let's take this back. Okay, so starting over. Two things that you need for this: the slow stochastic, and you need the 18 or 20 moving average, 20 days. Okay, what you can notice is when you come out, every time you come out of overbought, you make a run back to the 18-day moving average, okay? Every single time, okay? Except there are a few exceptions, okay? The real rule for this is when you lose the overbought reading, okay? When you lose that overbought, okay? The slow stochastic measures momentum between overbought, which is above this 80 line, and oversold, which is below this 20 line, okay? Every time it comes out of overbought, these two lines, this is the K and the D line, momentum and price, every time it comes out of this here, you make a run for this average, okay? The real rule is when you lose that, price and the closest main moving average tend to come together. So you can see here where you lose it. Every time you lose it, you make a run up. You lost it, you made a run up. You lost it, you made a run up. Okay, there. Here, you lost it, you made a run down. Here, it didn't quite make it there. Here, you lost it, and he came back down. Okay. Now, this last time here, and this is why it's important to understand that it is the main moving average. Okay. Normally, that's the 18. This time, though, I'll show you the main moving average for this. Here we go. Sorry, I don't want to create a bunch of dead space. Boom. You lost it and you made a run for the 100. Notice how it came, it sliced your red right through here, right? You didn't even bounce, right? It came right for the 100. So it is important to know that it will make a move for the main moving average. Usually that is the 18-day moving average. You can go back on the chart. You can see this at any number of times. It is a bull market, bear market. You can see this. So, and you can do it. You can see it long and you can see it short. So now this works really well on the daily. But like I said, you've got 1, 2, 3 trades there. 1, 2, 3 trades there. This is all the way back in August. So if you're trading this one setup, you've only got 6 trades in like 4 months. Okay. So it is, understand, it is very clear, right, as to what is. Now, the daily, here's the thing. Now, this is the way this works. Okay. So this is the principle. The principle of the trade setup is lose the slow stochastic of overbought or oversold, make a run, closest main moving average. All right. Here's how you trade this. The big money, the most money you can make on this is off of the daily time frame. Okay. So where you have this at is where you really want to look for this is starting. So you can start on these shorter time frames and start to kind of follow it down. As you lose these overbought readings, now here it didn't work. So maybe not that one. We're going to back test this right now, you and me. So probably starting with the 1 hour. And again, you can see, if you look on the 1 hour, see how tight this range is right here. Even if right, you get these moves, sure, you broke. Okay, so let's go back, right? Go back to here. You came out of overbought, over, right? And you can catch the move to the 18 on the 1 hour. You can do that. Bang for your buck, though. Not going to be there. In the 1 hour it takes this move to set up, you're not going to be able to catch that, right? But there's some stuff that you can look at that is actually really, really interesting here. Okay. You can front run this, right? And I'll show you here. All right. So check this. Came out right there. Okay, so you lost it here in and around this 402 level. Okay. You lost it here in and around this 402 level. Okay. This is where you started losing your slow stochastic. Okay. You lost your overbought reading on the 4 hour time frame. Check this out. You lose it there. Typically, what will happen is if you lose it here, there are only 2 of these 4 hour candles in a day. So if you lose it in a day, it means the daily time frame has to lose it also. Okay. So you lose it here, you can front run this by like a day and a half, right? Because the next day you can guarantee it's probably going down. Okay. It's pulling back, right? And you can go back to the 18 that day and you could have targeted anywhere. Well, we lost it. Lost it here at 4. You could have caught a $4 move. That's, I mean, for one contract, that's almost $200. Okay. Worth of intrinsic premium. Just right at the money. If you're paying at the money with Delta at 0.5, your move down to this, just down to this alone. And not to mention, you could have, it would have been very easy to know to hold because the trend stayed with it. So that would have been a pretty simple move to short into this and hold all the way down. And you could have used that 100 as your take profit, right? This turns into a scalp with potential, right? You could have really eyed that 100 or come out somewhere in this and just really done well. And if you turn your Bollinger Bands back on, you've got this here. You got your Bollinger Band down here. You could have kept targeting this lower Bollinger Band. And some guys probably even are now. But even then, just your move, there's $200, right there at the money, 200 bucks, easy move, just about guaranteed. And even then, your main moving average here was the 100. So all you have to know is that this 100 right now is going to trump that 18. It usually does, right? So when it's in play, but that's only because the 18 is currently above, right? It's at this level here, above the thing. So there are nuances to the setup, but the setup is simple. The principle of the setup is lose the embedded reading, come back to the 18, right? Or to move to the closest main moving average, right? This is where short started covering anywhere down here on any contract. Sure, you got to hold for a couple of days, but you could have covered anywhere in here. And as long as you don't have theta burn, if you don't have theta decay, you're making bank, right? Geez, if you made it all the way down to 393 from 402, you could have bought that 402 put. That's 350, 400 bucks per contract. And so it makes it's very viable, right? It's a very viable trade setup. Uses the daily and the 4 hour. So that is the one that I know. Like I said, doesn't happen often. There's about 6 trades inside of this whole thing, inside of it. That is very simple. Again, slow stochastic. The rules: don't go long above a Bollinger Band. Don't go short below a Bollinger Band. 18-day or the 4 hour loses the embedded reading. Take your short position. It means the daily will lose the embedded reading also. Price target, 18-day moving average. Pretty simple, okay? Again, or main moving average. 18-day, usually. 100-day, main moving average when it happens. So this is the one setup I'm going to focus on going into next year. I think this is where I'm going to focus. I think I am going to do some testing of this and myself and patients and see what can happen here. Again, you will set up here. Where then are you watching? Well, for going into next week or the coming weeks. Well, you're oversold, right? All of the guys who are calling out tomorrow, you're going to crash on Monday. That's going to be really hard to believe. You got support here at the 100. That's a pretty big moving average, right? That's 6 months worth of price action in that one average, right? You're oversold, right? And this is the one thing too here with it is, in order for this to really crash, right? It could sell down here, but I mean, you got shorts coming out. You got shorts covering. Sure, they sold off of the 18 because you short underneath the 18. You go long above the 18, but you've got so what you don't have here is what's called an embedded reading. Okay, so if we go back over here, okay, you see how it gets this period where it's just stuck down here and it just keeps riding that Bollinger Band down. In order to get that, you have to have 3 days of it stuck in oversold. Okay, if you get 3 days where this is stuck down here and oversold, the reading is what you call what Ira Epstein calls embedded. He's embedded the reading, and then you're free. It's not till then that you're really free to short this in an oversold condition because it's so oversold. Right, it's got a lot of momentum to the downside, and so that's really what it is. Now there may be a way to adapt this to like a 15-minute chart or like a 30-minute or like a 5 or 15-minute chart. I'm gonna work on that, I think, over the next couple of weeks going into next year. Next year's really the big thing for me. I'm expecting that year to be my turning point. So, and we will go over this setup more, because I think this is where I'm going to make my bones here. Now that I think about it, it is really guaranteed. If I can find a way to dial it in, I might be able to make a scalper's method out of it. So, Anyway, that is going to do it for me today. Again, my trading setups have sucked. I have not had those setups. I have lacked those definitions. It's very complicated to me. I've hit you with a ton of information about what setup I'm working on. I hope it helps you. If you find something about it, or if you backtest something, or if you have questions about it, please leave a comment in the comment section or the chat, whatever. And, so I guess it's time to do this rundown. The Russel Journal, written, edited, hosted by me, Russell Liss. We're produced by Social Media Shows. Our executive producer is Maria Pereza. Make sure to give them, if you're interested in doing a show, it doesn't have to be about stock market. She has a full studio in the Vegas area. If you are in that area and you want to do a show, she can help you produce a show. You don't have to know anything about lights, cameras, YouTube algorithms, any of that stuff. What you do need to do is know your material and be able to talk or communicate in some fashion. So check out Social Media Shows. They can help you out a lot. In the meantime, I'm Russell, and until Monday, just pretend I said some sort of catchphrase.